Thank you to the organizers for having me here today. If you're writing comments, which I think is a splendid idea, please do so in English. Yes, I'll talk about the Global Green Growth Forum, as well as Green Business Model Innovation, which is a project for the Nordic Innovation. The Global Green Growth Forum is an annual event convening about 200 top decision makers in the world. It's public-private partnerships, which consists of the countries Denmark, South Korea, and Mexico. There's a number of world-leading companies in clean tech involved, and then also a lot of international organizations. Last year was the first time we held the meeting, and in October this year we are having the second meeting. Yes, the purpose of the Global Green Growth Forum is to accelerate green growth by creating public-private partnerships. So basically it's less talk and more action. What we do is we provide a platform for these public-private partnerships to evolve and also to speak up what they have on their mind to top decision makers in the world. Yes, the Global Green Growth Forum, it feeds into a lot of processes. Some of them are listed here. I won't dwell too much at it because we're going to a lot of slides here. I just want to show one case, which is a financial track, which we're having this year. It's a public-private partnership between financial initiative like climate policy initiative backed by George Soros, and then the Danish Ministry of Business and Growth and other leading partners such as Deutsche Bank. And what we try here is to address the problem of the global investments that has to be taken on in this field. Jan mentioned it's huge numbers. So there's a need for so much money to make these investments come online. So we know there's the financial crisis, and that's put a pressure on banks and other financial institutions. We also know that public budgets are limited. So we're trying to think creatively and see who else can we bring to this to this challenge. So we have been looking at other institutions such as, for example, pension funds, and how can they enter this market. And we've seen that they are looking for new investments, of course, because the interest on bonds are almost at zero. So they're looking at opportunity investments and other investments. So, but they have, of course, some obligation and some regulation that they need to abide by. And we've found out that, for example, by giving government guarantees, that might be a missing link for them to enter this market. Two examples of two wind farms that has used this model with success. And I won't go too much into them, but we have an export credit fund in Denmark which backs with some guarantees for building a windmill farm, and a pension fund, Pension Denmark, is involved, and they are backed with this guarantee from the Danish export credit fund. Yes, some of the other tracks here at this 3GF at 2012. We'll be looking at energy efficiency in industries and buildings, integration of renewable energy in the grid, water, biomass, and also cross-sectional tracks such as trade, procurement, urban development, and financing, which I just illustrated. That was a very brief overview, but I have two topics to cover, so I hope you bear with me. The next thing I would like to talk to you, and thank you, Jan, for setting the scene so well before, because my kind of comes in that area as well, but it has a more business perspective. This is a project where Tekes is also involved. Thank you to Tuomo and Tekes. It's a Nordic innovation project, funded, runs 1 year, and it's delivering its output in a couple of months. The project, let me first start also with just me also giving my thoughts on why green business model innovation is important, and especially for policymakers, but then also for businesses. It's an established fact that growth is, of course, it depends on our technological and innovative ways to develop, and also, of course, of capital and labor. But what GDP or what growth theory doesn't necessarily take into account is the natural aspects, assets aspect, and the environment. So are we measuring GDP the right way, and are we or growth the right way, or and other things to be dealt with? I mean, there's a lot of market failures which might price natural capital assets lower than they should be, because they are a scarce resource. So that is, of course, of interest if we want to continue our growth. We need to take much more into account the natural capital that we have. Yes, and a consequence of this is, of course, increasing prices, which makes production costs even higher for companies, and more volatile. It's difficult to see into the future, and of course we don't know if this price increase will continue, but a good guess is that it will, at least for some years, and then of course it's difficult to say something about the future. Why is green business model innovation, and I'll come back to the conceptualization of this, why is this interesting for companies also? We see companies, as Jan mentioned, engaging in this. It's a minority doing this. Why is this? Why are they going into this area? Well, they might capture new economic value through new markets. That might be ESCO models. I know they've been around for some time, but in some countries they're just emerging. I have an example of that. It's also to strengthen their competitiveness by saving, of course, resources, reduction in waste management, improving work environment, boosting productivity and branding, and attracting talent. And then also it's a catalyst for innovation. In the project, and I'll also come back to what the project really is about, a little more than 70% of the companies asked, we asked about 45 companies, they had a positive financial result by implementing green business model innovation into their business. The project is a phase 2 project. We had a project in 2010 where we primarily looked at models like product service systems, where you go from selling products to selling a service or a function of the product. And then we have this project now, and we're conceptualizing green and business model and innovation. And we're doing that, we've set that up, a framework for that, and we've used that on the cases, business case studies that we have interviewed, and then we're doing an effect analysis study, studying the effects on the environment, the effects on the economics, and the effects on innovation. And then we have a fifth work stream, which is on policy. We have done a policy scan. What's been done to facilitate green business model innovation in the world? So we have, and then we've come up with a concrete recommendation for these partners that are involved, Nordic partners. And then finally, tools for companies. Of course, we should have a definition for this. This is a working definition, but basically, green business model innovation is when a business changes part of its business model and thereby captures economic value as well as reduces its ecological footprint over the whole life cycle. And more generally, it can be said, because this is a very open definition, I agree with that, but generally it can be said that the more of the building blocks that you change in your business model, and the more profoundly a green change you change, and that's going from modification to redesign to alternatives to creation. That's Jan was also talking about that. The greener the business model is. And we have looked at some special kinds of green business model innovation models to focus the project, because naturally with that definition that includes clean tech companies, that includes almost any company that does anything green. But we tried to look at the radical models, and those that might have a higher impact on the business model and the different building blocks, and then also, of course, on the entire business model. And we set it up in a life cycle model, and or categorized it as a life cycle model, such as cradle to cradle, or take-back systems, closed-loop production, etc. And then also on incentive models such as ESCOs or WASCOs or MASCOs, and functional sales, etc. Because those are the models that has the highest impact on the whole business model, as well as, of course, the value chain. That's illustrated here. Some of the models. Industrial symbiosis is, of course, also one of the life cycle models. These are some of the companies which were involved, which were interviewed, and some of the companies which we've based the business case study on. This is the Osterwalder's business model canvas, which some of you may know. That's used as a tool to frame this and to make the analysis a bit more easier, and also to draw out the learning points from this. And this is an example of, I think it's easier to illustrate it with an example. This is the Danfoss solution. This was a company in Denmark producing products such as energy efficient motors and things which goes into, for example, a factory, production facilities, etc. And they were mainly targeted at the industrial food and beverage companies. They had a one-time product payment for their products, and when they changed the business model, they went over to the ESCO and was a performance payment and gave a guarantee. So here you see the change in the business model, and that's possible for almost all industries and almost all companies in different sectors. So this is not just something which is special for the clean tech companies. Industrial symbiosis can be done by non-clean tech companies, but that's a way of thinking smart about your resources in a life cycle way. Also, Maersk, the biggest world. I don't know. Am I about finished here? 1 minute? Okay, I'll finish up. I think this is the last slide, or two last slides. They're facing, of course, rising prices in energy from fossil fuels, also high prices in steel. So what are they doing? They are, before, of course, the business model is to transport goods from A to B. But what they did was they went into the design phase and looked at how could they design the ship so it could be disassembled much more, so they could take out the iron or the steel, high-grade steel and low-grade steel, so it doesn't get mixed at the scrapyard. And the bottom line is that they get they're expecting a 10% higher scrap value. They're expecting to get some CSR premiums on some of their customers, etc. And this is also something that can be considered for many other companies, and not just a clean tech company. Thanks.